What is going on, investors? Hopefully you guys had a great week. That's right. It is Friday. Time to talk about our favorite FAANG stocks, plus Microsoft and Tesla. We'll run down the news and we'll jump over the stock charts and take a look at what's going on with these companies. Now, we had an eventful week with these companies, with Amazon and Google reporting earnings as well. Now they've all gotten through earnings season. So now it's time to roll. Let's talk about Facebook. They started the week at $258 per share, went up to $10 to $268 per share. Facebook had quite a bit of news this week. Senator Amy Klobuchar, who is a Democrat out of Minnesota, is introducing a new antitrust plan that really is targeting big tech companies like Facebook and Google and the other ones that we'll talk about today, that is going to make it a little bit more difficult for them to make mergers and acquisitions to get through the FTC and the Justice Department. Whether or not this bill makes it through, I don't know. I just find it really ironic that companies like Facebook and Google donate heavily to the Democrats, and a couple weeks into a new administration, what do? Introduce a bill that will make it harder for them to make money. So maybe that is why Facebook decided to do a large buyback this week, authorized an additional $25 billion on a buyback, probably because it's going to be difficult spending that money acquiring other companies going forward. Facebook has this oversight board. I thought this was interesting. So it overturned 4 of 5 cases tilting towards free speech. This oversight board, which is 20 journalists, politicians, and judges. Well, whether or not that's a great mix of people to oversight Facebook, I don't know, but that's what Facebook has decided to do. And these rulings by this oversight board are binding towards Facebook. So they overturned 4 or 5 cases. They have not, I repeat, have not ruled on President Trump's account, which is supposedly on its way to this advisory board, or maybe there already. We'll see what they decide on former President Trump's account. Facebook is offering user prompt to counter Apple's privacy moves. So Apple's got this new iOS and it's got some privacy thing in there. It's going to make it more difficult for sites like Facebook and even Google to track you along your journey along the web, to show you more relevant ads. So what's Facebook going to do? They're just going to prompt you and ask for your permission to do that. We'll see if that, I would guess a large percentage of users are probably just going to play, yeah, okay, let me just go check my feed and what's going on with my family and my friends. So we'll see if that kind of move kind of counteracts Apple's privacy, what they've implemented. We'll see if that happens or not. Moving on to Apple, started the week at $133, just slid right up to $136 per share. This one's consolidating an interesting range. When we go over the stock chart, we'll talk about that. Now, Apple's got a mixed reality headset that could cost 3 times more than current models. So it looks like it's going to be priced maybe close to $3,000, well above about the $1,000 price tag you see on current VR headsets. So, people that are fans of VR might welcome this, but, a $3,000 unit will certainly be, in my opinion, be kind of a niche market of the VR market. VR is probably already niche, and then when you're talking about a $3,000 headset, it's probably even more niche, but Apple could be carving some things out there with future business in that. Apple will team up with Hyundai. This is the big news of the week. Apple is going to team up with Hyundai. At least this is rumored. Okay, this is not fact yet, but a noted analyst says that they will team up with Hyundai. We saw these rumors maybe a few weeks ago. It certainly makes a lot of sense, but don't expect an Apple car to hit the road before 2025 at the earliest. So it's going to be a while, and it could be that just Apple, it might not be a quote-unquote Apple car. It might be a Hyundai that just has a lot of Apple technology built into it. That's possible too. We'll see how this goes forward. Here's what I personally think. Tim Cook is not the best communicator, in my opinion, when it comes to like hyping up the Apple and hyping up the stock. What I would like to see Apple do is hire a guy or a girl to be kind of like the hype person behind the Apple car. Okay, give us updates on it. Do videos, do press releases. somebody other than Tim Cook hype this thing up, because Tim Cook is, in my opinion, really, really bad at it, and or just doesn't do it at all. And so I think Apple, at least from a share price perspective, would benefit if they got kind of like a hype person behind the Apple car. Now, moving on. Apple launched a $14 billion bond sale, so they're tapping the bond market again. They got this at a 115, 120 over Treasury, so anybody wants to loan me money at that, I'll take it. Apple's certainly doing that. They're going to use this primarily for stock repurchases and dividend, quite frankly. That's what they basically borrow money to buy back the stock at Apple and pay dividends. That's pretty much what Apple does with that. Now, moving on to Amazon, which reported earnings this week. Massive news, obviously, coming out of Amazon. We had a $3,267 price tag on the stock. Now we're at about $3,352. The big news, obviously, a CEO, founder, Jeff Bezos, is going to exit the company, at least from the CEO role, in Q3 of this year. So here's some interesting news, though. Amazon loses its appeal of Alabama warehouse union vote. So, Amazon is probably, I would guess, Amazon workers are probably going to start unionizing. Once other workers and other, factories and warehouses out there see that Alabama's taking the lead on this, guess what? The rest of them are going to follow suit. We'll see how that impacts Amazon. I'll tell you how they're going to counteract this. They're just going to get a bunch more robots to do things in the warehouses. So be careful what you wish for if you're an Amazon worker right now. So Amazon's planning an incubator to launch more trucking companies. Now, this is actually, you would think maybe this is like building trucks, but no, this is like on the delivery side. Okay, launch things like what they have with Amazon. A lot of those Amazon vans are owned by independent contractors. Strangely enough, too, FedEx operates under basically the similar model. All your FedEx ground packages are actually getting delivered by a third-party company that basically just license through FedEx. So Amazon going to do the same thing. They think that's the way to really expand the business, and I would agree. It's less employees, it's less trucks that they have to own, it's all this stuff that they don't necessarily have to own themselves, but they partner with other companies out there and share a little bit of delivery profits with them. I think that's good. Now, again, incoming Amazon CEO is this Andy Jassy guy who's been with the company for a long time, since the 90s, so he's been there a while. He's currently the head of AWS. And he talked about video games as being one of the things that he was kind of the most excited about, including like making video games. Now, obviously, you might think this is kind of weird, like Amazon making video games. Amazon owns an extraordinarily popular streaming platform, Twitch, and I think they own it like 100%. So they have a massive stake in that. And Twitch, it's not a platform I'm on or I use, but I'm very, very familiar with it, and it is extraordinarily popular, especially in the video game kind of gaming market. So that's certainly something to keep an eye on if they get into the gaming market. Well, they have this platform where they can just kind of like launch and promote these games onto Twitch, which is where a lot of the audience already is. Moving on to Netflix, started the week at $5.35, ended at $5.50, consolidating in an interesting range. We'll get over to the stock price with Amazon. We'll see that. Now, Netflix did jump a little bit this week because they announced, or they're anticipating a price increase in Japan by about 13%. We talked about this a lot on the show, how this is how Netflix is going to grow in the future. Okay, most people here in the United States and Canada have a Netflix account if they want one, and if they don't want one, they don't want one. I don't think that's the case necessarily across the world, but eventually in 24 months, 48 months, however long it is, they'll get there, and the way they're going to churn out more money is by raising prices, and it appears they probably have pricing power over at Netflix, especially compared to like a traditional cable program or cable service or like a DirecTV. Moving on to Google, they also reported earnings. Google stock has just been on fire. This stock started at $1870, ended the week at basically $2,100. You go to the stock chart on this one. This thing is like Michael Jordan in his prime dunking on somebody. This stock is just taken off. It's in rarefied air. Now, Google did strike a deal with a couple Australian publishers on their news platform. We've talked about this here on the last couple ones we've done. Australia passed this law law, or they're going to pass this law that requires Google to pay the news platforms out there that show up on their search, and Facebook's kind of mixed into this. Google threatened to take away Google search in Australia, which I think is like 90% of the search market in Australia. And, so they've reached some deals. I think they're still working this out with Australian regulators, but it appears it's moving in the right direction. Now, don't think that Microsoft is going to sit on the sidelines and watch Google say, hey, we're going to pull our search engine from down under. Microsoft said, hey, well, we got Bing. A lot of people probably don't even remember that, but Microsoft owns Bing, probably the second most popular search engine, although it is dwarfed in comparison in Australia. 94% of search goes to Google. Bing only has 4%, but if Google wants to play hardball, guess what? Microsoft might step in there. Now, speaking of Microsoft, they started the week at $235 per share. This stock is also very strong right now, ended the week at $242 per share on the heels of their earnings last week, which were very good. Now, not a ton of news actually out of Microsoft. They're sitting on a huge wad of cash. So obviously, if Congress starts passing laws that makes it tougher for them to do acquisitions, it'll be interesting to see what they end up doing with that cash. It could be more dividends, maybe more stock buybacks, or maybe they're able to fit an acquisition in there somewhere. Now, moving on to Tesla, started the week at $817, sold off a little bit, but then rebounded nicely to finish the week at $852 per share. Tesla has agreed to recall 135,000 vehicles, which is actually quite a few. I mean, this is for a normal automaker, not normal, but like another automaker that makes millions and millions of cars, like a Ford or a GM. 135,000, not a lot, but Tesla doesn't, they delivered, I think, 500,000 cars last year. So to recall 135,000 is actually quite a bit, and this is due to some touchscreen issues. I'm sure Tesla owners will give them a slide on that one and probably slide in and get that repaired. Now, Morgan Stanley's doing some math. Hey, that's cool. And you know what's cool is they think Tesla could reach $3,000 per share. Okay, it's at $852 right now, $852. So $3,000 would be quite a jump. And so, we'll see if that could materialize. But certainly if you're a shareholder of Tesla, you kind of hope it does. Now, moving on to the stock chart, we'll start things off with Facebook. Facebook's actually consolidating in a box where if you want to buy this one, you think the uptrend is going to continue, it's not a bad level. I think the best level to acquire Facebook is from 247 up to 260. That's like the lower end of the range that we've seen hold true really since back like in the summer of 2020. Now we're in the what I would call maybe a secondary consolidation box between 260 and 270. The stock is currently at 268. If you want to acquire shares there, I think I wouldn't necessarily be really aggressive, but I think you can be somewhat aggressive because above 270, this stock likes to go all the way to 285 or so. Now, 285 is our critical level with Facebook. Every time the stock has gotten close to the 285 level, it has gotten rejected. It's peeked its head up over a little bit, even on the heels of very strong earnings, and it's very quickly actually gotten rejected. So a sideways consolidation since the summertime with Facebook. I would expect this stock to either break up or break down at some point. When that is, I don't really know, but I do like sideways consolidation in companies that I like to buy, and Facebook could potentially be in that area right now. Now, Apple's in a little bit different story. We're actually in what I would call kind of a shorter term uptrend with this one over the last, we'll call that almost 3 months. The chart's not that unsimilar to Facebook, although Apple was able to break out. So we had this point at $138 per share, which were the all-time highs for Apple. Once Apple broke that, I think it was on the heels of earnings last week, Apple kind of teetered up into the $145 range and then basically got rejected. And now we're kind of stuck. I think we're kind of in the intermediate term with Apple, stuck inside of a range between $129 per share and $138. A break above 138 could be bullish, could send us back up to 145. Any surpassing of that, and this thing could be off the races, kind of like what we've seen with Google. But a breakdown below 129, in my opinion, creates a relatively strong buying opportunity with Apple, since anytime this stock has broken down below the 129 level, it has been a buy. Moving on to Amazon. Amazon just tiptoed above a range where we've had marked out. Now, Amazon's been sideways consolidation, almost like Facebook, really since the summer, kind of the early fall of last year. And it's just been going sideways. It has been going sideways between $3,100 per share and $3,300 per share. And it finally broke out above it, and it actually stayed above there this week. Now, we have not approached the all-time highs, which are close to $3,550 with Amazon. So that's kind of what I'm looking for next week. Can Amazon stay above 3,300? A break below 3,300, in my opinion, could open up the door for 3,100, and anytime Amazon's got to $3,100 over the last, call it 5, 6, 7 months, it has been a buy. And so that's what I would be looking for with Amazon. If we stay above 3,300, we're trying to see if the stock can get back up to 34 and then potentially 3,500, because then it could start performing a little bit like Google and start making new highs. What could cause it to do that after we've just gotten through earnings? Not exactly sure, but we'll see if something like that can materialize. Netflix is consolidating in the upper end of the range. So we had this area marked out at 510 with Amazon. Anytime the stock kind of breached up above that, it really went off to the races, but often pulled all the way back down, really all the way down to like 470. Now, obviously the stock's at 550 right now. And what I would actually anticipate with Netflix is kind of a sideways consolidation between $520 per share up to about $580 per share. Anywhere in that range is not bad. If I wouldn't personally want to buy the stock in this area, but it could be an area where if we get enough sideways consolidation with Netflix, it could create buying opportunities, in my opinion. Now, moving on to Google. Google's chart is just, off the charts. This thing, I don't know. This thing is just completely blown up. It's created a massive gap. We gapped up from about $19.20 per share all the way up to almost $2,100 per share. So we've created this massive price gap. So with Google, really, personally, I don't like to buy stocks when they have this massive kind of gap and run. Some people like that. Some people that's all they trade. They trade like momentum. And so if that's you, go to work on this. This is a great stock right now for that kind of strategy. Personally, I'd wait for a pullback. Like I said, we created this massive price gap between 1920 and we'll call it 2020. So we've got a $100 price gap. If we see Google stock reverse, I would actually anticipate that gap being filled on this chart, and 1920 would be where I would first want to step in with Google, as we would have filled that entire gap and we would meet an area of support that likely is going to step in with the stock. So 1920 is where I'd look on a pullback. But Google next week could be $3,000 a share based on how this stock is running. We'll see if that materializes or not. Moving on to Microsoft. Now, Microsoft was in sideways consolidation really since about September, October of last year, kind of waved around, and now we're in a very steep uptrend. This looks very similar to Apple, in my opinion. We have a very steep uptrend, and we're actually above, I would assume these are maybe all-time highs with Microsoft, although they've had some highs way back in the .com area that could be higher than this, but we'll just say in recent memory, they're above 239. In fact, the stock's at 242 right now. Above 239, I have marked out here as kind of the peak of what we've made. And if this stock can stay above 239, that personally would be this first area. If you're just dying to get into Microsoft, 239 would be my first area. Secondary level, probably a much better area. I know it's like only $7, but $7 is $7. 232 would be more interesting. Even more interesting than that would be 225. But again, that's about $20 where the stock is today. Whether or not it gets down there, the momentum of the stock market just doesn't seem like it wants to do that. Now, I think Microsoft could do two things. We could sideways consolidate up here, but it could also work out like a Google where we just kind of inch forward. 245, 250 could be in the cards with Microsoft. This is a stock I would not look to sell up in here. I would just look to hold this one. It looks really, really strong. And this is a company with a massive war chest, and they're going to probably, I would guess, probably do some stuff with it in the new year. Moving on to Tesla, finally our last one. Okay, so actually Tesla's in a really interesting spot. We're sideways consolidating up here with Tesla between 813 and 883. We'll call it 885 just to kind of round it off. So really tight consolidation with Tesla. Anytime Tesla has consolidated sideways over the last, for a while now, maybe for its entire lifetime. Anytime Tesla is sideways consolidated, guess what happens at the end? It breaks to the upside. And it's certainly done that, at least on our graph here, where we have going back to about August. This stock likes to sideways consolidate. And then once it breaks out above that, it tends to want to run. So any break above $893 per share with Tesla, right in that $893, $895, this stock would likely, in my opinion, want to try to retest or actually force this stock higher, probably 940, 950, somewhere in that range. If you want to trade Tesla, okay, there's two levels. There's 780 and 818 or 815. 815 and 780. Any pullback into that range, we're about $20, $30 from there. Even a little more than that on the lower end of our range, we're about $60 from there. Any pullback on this sideways consolidation to that area would be a buy, at least for a shorter term trade. If you want to add to your position there too, as a long position, I don't have any problem with that either. But I would, that to me would be an interesting trade setup. And again, any break above 895, and I would actually anticipate this stock probably running a good bit, probably another 5, 6, 7, 10% above that. We'll see if that materializes, or if we just the other thing that we could potentially do is just sideways consolidate between 818 and 890. And this stock just goes sideways for another week or two before it decides to break out. It could go even longer. We see this sideways consolidation back started right around October, and it went actually September of 2020, and it lasted like 2 months. So we consolidated for 2 months. This consolidation is really, we're only in it for a month. So we could consolidate sideways for a good period of time with Tesla before it resumes what I would assume to be an uptrend with Tesla. So hopefully you guys had a great Friday and you guys have a great week as well. We'll be back again next week with more news. Thanks for everybody for commenting and liking and subscribing to our videos. I really appreciate it. Have a great weekend. Good luck with your investments.